Good morning. Testing if this is on. It is on. Great. The microphone's working. Okay, I'm Vince Lancy, and today's market rundown, morning market metals rundown is starting. What are we going to talk about today? We're going to talk about 3 reasons for gold and silver to re-rally last night and today. It's actually 4 reasons, and that'll be the 4th reason will be the focus of our conversation. There's the homepage, and here are the markets. The dollar is down 437. I'm sorry, that's 10-year yields. I'm inverted. Pardon me. 10-year yields are 437 down 4. The dollar is 106.40 up 16. S&P 500 is 58.79 down 15. The VIX is 16.56 up 99. Interesting. Gold is 26.33 up 22.15. Silver keeping pace, though not leading this morning, 31.37 up 22. Copper 409 down 2 cents. They're selling copper now. We'll get into that in a minute. WTI 69.26 down 14. It was up 20 a little bit ago. Natural gas 280 continues to rally. Bitcoin 92,400 and change, up 1,800, 2%, the magical 2%. Ethereum, the new silver, down 72 at 31.37. Palladium up 4 at 10.11. Platinum 968 up about $1, and gold silver is stable, slightly firmer, and grains are mixed. Soybean is down 2 at 10.09. Corn is up 1 at 4.23, and wheat is up almost 4 at 5.68. There's the front page. We're going to be discussing some of this report, which was just sent out to premium subscribers. There's that Fort Knox post that I'm so proud of, and there's Hartnett's analysis, which says buy gold. It's happening all over again. If you're a bullion bank right now, you're going, oh shit, here we go again. I mean, and I'm going, oh shit, here we go again. I thought it would be lower. But, I mean, Sunday I said it would be higher, but this is pretty crazy. All right, so discussion. Why are gold and silver re-rallying now? Gold and silver, this is yesterday, right? So gold was up 1.9% yesterday. Silver was up 3.0%. Oil was up 3.4%, and Bitcoin itself was up 2%. Stocks were up 30 basis points. They were all methodically bought during U.S. hours. As far as commodities are concerned, however, the buying started out of the gate on Sunday night and gathered momentum during Europe. If anything, stocks were held down by the money flowing into commodities by the time we got to U.S. hours. The identifiable drivers were threefold as far as commodities were concerned. Number one, the one that we all saw coming in Sunday, Russia-Ukraine war is increasingly becoming a Russia-U.S. war, world war, as Biden's threats of permitting Ukraine to fire missiles inside of Russia, which I think they actually did yesterday, were met with Russian pushback of escalation. That's a good reason to buy gold, especially if you are short hearing the news Sunday night and got your ass handed to you when Israel and Hamas started fighting and when Russia invaded Ukraine. You're short, you're covering Sunday night. Second reason, China. Now, this is not out there except for our friend on the mainland, Bai Jiajun. China has changed the rules at the SGE. This is market structure. You hear me talking about market structure a lot? This is market structure. You ready? They changed the rules by permitting smaller firms to transact smaller volumes on the SGE physical exchange. Physical exchange, this is like their LBMA, or if you're trying to correlate them. They're opening the exchange up for other participants to attract more metal for investment. Now, the investment is a tricky word here. Given that silver is heavily used industrially in China, this implies they want more silver and are going downstream in the hopes of securing more of it. An example of going downstream that we've already seen is you go from buying it on the exchange to buying directly from the miners to buying it in concentrate form, which they've been doing for years. Everyone does that to an extent, but China has really ramped up their concentrate purchases. And this is a similar idea. Instead of buying it from institutions, you're saying, well, we have a great distribution network. We have an exchange here that's recognized. Let's let everyone buy it. And so everyone's buying it. Very similar, although it's not the same, of what they did with gold in China. They're democratizing ownership of silver. And the idea is, although it looks like it's so all Chinese citizens can buy silver, they don't have an appetite for silver as stackers yet. They have an appetite for gold, and it's cultural. But the nation has a large appetite for silver as industrial use and as money. They have a long history with silver. We've written about that before. Again, thank you, Bye. Continuing on with the insights here. This has implications for exchange pricing power as well. The takeaway is, or our takeaway is, they want everyone to buy silver locally. This is part of their path. And to most observers outside our little world here, it is another piece of, it is a random policy moment. Oh, they're changing capital controls. No big deal, right? To us and our readers, it is another piece of a puzzle coming together for silver and gold revaluation. The market structure is changing. It's like Basel III saying you can own gold. Well, China's saying you can own silver now. The third reason is traditional correlations. Yesterday, the dollar was weaker, so they lent themselves to buying dollar-denominated commodities in U.S. hours as the dollar was weaker. Now, do correlations matter? Yes, they matter. They matter globally because it's traded in dollars. They don't matter as much globally as they used to because people aren't using dollars as much and using euros even less, but they still matter very heavily in the US. If not a reason to buy gold, it's a catalyst to buy gold. The dollar's weaker. Well, shit, everyone else is buying gold. I should buy it too. That's the rationale now. All right. Now we're going to give you, there's a 15-minute chart yesterday. So just to give you a quick technical thing there. Gold, silver, oil, Bitcoin. Notice that there's lines on 3 of them, not on Bitcoin, because Bitcoin is not tracking these commodities except during US hours. The first line's drawn, that's Asia and Europe. The second line drawn, the steeper line, that's US buying coming online, driving it higher, right? So Asia and Europe is Asia and Europe buying. Well, other people are buying too, but I'm not going to say that. And then US buying, that's the normies, that's good old boomers and Gen X buying. And then the end there, that little line at the end, that will be finishing the order for the day. That's the VWAP part. But it wasn't too aggressive. So that's the behavioral pattern. So now we go to the fourth reason. The fourth reason we will add for the rally in oil and precious metals. Goldman Sachs published a report on Sunday late afternoon. Nice, right? Recommending specific commodities for 2025. Now, that full analysis has been written up and is also linked at the bottom. We just sent it out. Bottom line, just give you the bottom line here. Goldman put out a very, what's the word I'm looking for? Actionable report during buy season. They said, buy gold. Nothing else about gold. I mean, there's a lot about gold in there, but nothing like, buy this gold, nothing fancy, just buy gold. And they reiterated it. And for oil, despite the they call it the twin markets or the twin behavioral patterns, they said buy oil. They wanted you to buy it in spread form, but it doesn't matter. It just means buy oil. And then the rest of the report is a discussion about very interesting discussion if you're a copper person and a silver person about copper versus iron. And they're looking at China and they're saying, we like base metals, but not iron. We like copper, we like aluminum, we don't like iron, we don't like rebar. And it's a real simple narrative, right? It's China's buying metals not to build buildings anymore, so they don't need rebar. They need copper and they need aluminum for solar panels. By the way, just like a little sidebar here. Goldman never writes about silver. They always write about copper. And when they write about copper, they're writing about silver implicitly. Why? Because if your sales pitch is, if your story is, if your legitimate reason is China's going to buy base metals, they're going to buy copper for electrification, and they're going to buy aluminum for solar panels. Well, what about silver? Of course they're going to buy silver. and that's what they're doing. Uh, Bank of America will write about silver. JP Morgan will write about silver. Goldman never does. They really, I don't know why that is. Uh, but when they talk about copper, think silver. That's my tip for you. So the bottom line is Goldman said buy gold and buy oil, and as their two top trade ideas, and everyone did. That's your fourth reason. So you may sit there as a scarred veteran of gold and silver. When Goldman says it's usually the top, you know what? Could be. It could be. But when Goldman says it and it goes up, are you going to say they're wrong? Are you going to say that their clients went, oh, that's a good idea. We like it. And when people like a good idea, do you want to get in their way? We don't. News and analysis. Rabo, China, U.S. tariff tug of war begins. That's Michael Every, geopolitical tariff stuff. Sunday options masterclass, in which I don't know if I recorded this section, but every week when we do almost every week when we do the commitment to traders report at the end, we have a quick back and forth about what we think the market's going to do next week, right? And when I'm put on the spot, I'll say what I think it's going to do Sunday night, because Sundays were big trading nights for me. They still are, but not like they used to be. And I was put on the spot, and the whole conversation was, we have a fish hook. It could turn around higher. I don't see it yet. We have a fish hook. It could turn around higher. I don't see it yet. Fish hook, but you know what those are. And at the end, someone had said, "Oh, check it out. Russia. The whole Russia-Ukraine thing." And I'm like, "Oh, gold's going higher Sunday night." What's going to happen by Friday, I don't know, but gold's going higher Sunday night. And the reason I said that was because I'm a bullion bank, I'm a short, and I go, oh no, more war escalation on Sunday night? Shit. Boom. Right? And the Goldman report comes out and yada, yada, yada. There you have it. So I don't know what's going to happen by Friday, but I did say we're going up Sunday night. Now, I didn't say $50, I didn't say, I just set up. So at least one of the founders bought on that. And that's my congratulations to him. My guess is, and like anyone who's really thinking about their own risk, he was already biased to buy. And I said something that said, oh, it gave him a green light. He already had his idea. It wasn't my idea to buy. It was his idea to buy and my idea to say, you know what? I think it's the right trade. Anyway, okay, next. First look, Goldman's top 25 commodity trade just out. I just sent that out. I sent that out to founders last night, but the actual analysis went out this morning to all of you. Monday, technically speaking, gold's not done. Stocks, maybe that's a technical report. Monday PM post, that's basically a recap of everything we saw there. Moving on. Market news. I want to go through this because there's lots to notice here in the equity world and the bigger picture, and it relates to tariffs as well. So first story, top Justice Department antitrust officials have decided to ask a judge to force Alphabet's Google to sell off its Chrome browser in what would be a historic crackdown on one of the biggest tech companies in the world. Okay, my own opinion is I'm a Firefox person over Chrome, but this is what we did in the 70s, the late 70s, the early 80s, actually. When government has made up its mind that it needs to help one industry and hurt another, it starts all of a sudden caring about people. And we care about people, and the Chrome browser is bad. Well, where were you like 2 years ago? Like, you may not think Chrome is bad, but if you're pseudo geek like I am, you understand why Chrome can be bad. But it's not just Chrome. It's like Google is Microsoft now. You follow me? Second one, and this one is just phenomenal. I mean, this is like never short Elon Musk. Tesla shares jumped on Monday following a report that President-elect Donald Trump's transition team is planning to make a federal framework to regulate self-driving vehicles, a top priority for the U.S. Transport Department. Okay. The taxi cab industry throughout the country, but locally regulated, has been a regulatory protective moat. People call it a regulatory capture or a government moat. So you have to have, like, for example, in New York, you have to have a medallion, right? You have to go through, it's all for protection of people, right? So you have to have a medallion. Medallion becomes a license. Licensing becomes important. And so it restricts who can drive a cab. So Uber spends 10 years breaking that monopoly, right? And they're just starting to make money. So what did Uber do? Free market capitalism, okay? comes in and, the pros and cons of it aside, but the pro is free market capitalism comes in and disrupts a government regulatory framework. Okay. A year later, after they finally get profitable, Elon Musk comes along and says, you know what? I got these robo taxis and they're pretty cool. And the government says they're planning to make a federal framework to regulate self-driving vehicles. That's Musk. That's Musk reinstating the regulatory framework to protect his product, which is coming out. It's brilliant. Okay? It's brilliant. This is a message to the capital L libertarians. I'm going to challenge you on this. There is no such thing as deregulation when it comes to US government. There is only moving rules to help you. And you sit there and go, well, there's deregulation. I'll give you an example. In the 90s, government deregulated, what was it? The communication companies, AT&T, they broke down AT&T, but they re-regulated at the local level. So you couldn't sell telephones if you were a cable company. The regulations protected the phone companies from, okay? And then they deregulated that, and the cable companies came in. And what did the cable companies do? They built a protective moat around them to prevent others from doing phones, like cell phones and stuff like that. And so the rules just keep getting changed to protect whoever is in power. Lo and behold, Elon Musk, genius, wants two things. He's a genius, right? One, let's end subsidies for electric vehicles. That's what I would do if I had the number one electric vehicle. Let's end subsidies for other people making charging stations, because then I will get the charging stations. He has the market share now. And let's protect people for robo taxis. It's just brilliant. Okay, Donald Trump's advisors, I just love that stuff. Donald Trump's advisors are weighing a new slate of contenders. The slate, it's Bissett versus Lutnick. Okay, we talked about that over on Sunday. Bissett is Machiavellian, smart, geopolitical, and practical. Lutnick is influential, savvy, and a salesman broker. It's a matter of style and who you like. One is more practical, one is big with big picture ideas, and another is more focused to the point. China's biggest technology groups are building artificial intelligence teams in Silicon Valley, seeking to hire top U.S. talent despite Washington's efforts to curb the country's development of the cutting edge technology. This is about precious metals. I mean, it's not directly about precious metals, but watch. You can't stop the trend, only slow it. They are testing our free market principles. You say you're an open market, then let us set up shop there. You say you're a free market, then let us set up shop there. Isn't that what they're doing with metals? You say you're a physical exchange, then let us take delivery. Same idea. They're testing our open borders for business. And that's how you do it. Spirit Airlines filed for bankruptcy, overcome by stronger competition for budget fares and the carrier's own hefty debt obligations. I can't believe they're not talking about this, but that's a lot of jobs that are just poof gone. I don't know how many. Billionaire investor Stanley Druckenmiller built a sizable position in regional banks and made one healthcare name his biggest position last quarter. I don't know what that is, but it's probably related to all the other companies are going to do poorly. What did I write there? Vertical roll-ups coming. So in the banking industry, BTFP, remember that? BTFP crippled, it saved, but crippled the regional banks and made them kind of like zombie banks. And so now the regional banks will get scooped up as cheap by the bigger banks. And that's why regional banks were a buy. I don't know if they are anymore. Politics and geopolitics, we'll skip that today. Data on deck, housing and talking. Oh, more housing today. Premium, there it is. Goldman, buy gold, buy oil. That's it. I'm Vince. Quick look at the markets, up 26. It's happening again. If you're a technician, I'm focusing on this today, right? Look, this is the 100-day moving average. We got our fish hook down here. I thought we were going to get one, but not this big, right? Boom. 100-day moving average is where they bought, which means they're looking at moving averages again, which means the 50-day moving average is what they care about next. If it gets above the 50-day moving average, you're going to see more FOMO. If it doesn't, you're probably going to see a sideways range. I would look for a moving, if you're alternatively, I'd look for moving averages to change their slope. If they change their slope higher at the 100-day, we'll power through the 50-day, no problem. And by the way, this is good to see. You may not be like, oh, silver's pricing is different than gold, but the moving averages are the same. Pretty cool, huh? Pretty cool. See that 100-day moving average there in silver? If that thing just changes its slope to positive, it's rocket ship time. Let's see what copper looks like. I didn't look at copper. There you go. And copper's below both, and the 100-day is downward sloping. Be careful. That says to me, be a little bit more careful of silver. Don't be so cocky about it. But it does say to me that they're not buying copper this time. Anyone who used to sell silver is like selling copper now. Well, not anyone. Hopefully everyone. Vince, have a great day.